Hi traders, and welcome to my video on the candle range indicator, where I'm going to show you how you can use a simple strategy to capture moves such as this one for over 400 pips. Okay, so I'm using the MT4 MetaTrader 4 trading platform here. I have a pound-dollar 1 hour chart open and the candle range indicator, which I found free online, displayed below my chart here. Okay, so this is a very simple strategy. What we're going to do is we're going to look for a trend, and then we are going to time our entry into the trend using the candle range to help us decide when. So the first thing to do is to look for a trend. Okay, as you can see here, there's a clear downtrend. Okay, so if we go back, we would have established from around here when this market is making these lower highs. Okay, we had this level of support here, which was breached around this point, okay, with the lower highs, and the bearish price action was confirmation of this downtrend. You could have actually, as an aggressive trade, have taken the breakout of this support line here, okay, or even just waited for the breakout there, the pullback, and then entered on the pullback around here. Okay, so in fact this support goes all the way back to here, so you can see strong level of support there. Okay, downwards trend, wedge formation, consolidation, and a breakout to the downside. So this could have been a good entry point into this particular move. We didn't even need a candle range indicator for that, with a profit potential of around 300 pips. Okay, you could have placed the stop loss above the high here, so around 15 to 20 pips. Relatively tight for the 1 hour chart time frame. And I would have used a trailing stop. I wouldn't have just left my stop loss there. As the price was falling, I would just put my stop loss above the recent highs. So here and here and here and here and here. Just basically locking in as much profit as possible. So if and when price does turn around, we can bank as many pips. You can, of course, close part of the position on the way down. But as you see the market start to make higher lows and this consolidation, you might consider closing the position. If not part of it, and allowing the rest to run or be taken out by your trailing stop, which may be up around here somewhere. Okay, that way we can be wrong numerous times with a 15 to 25 pip stop loss on average, because eventually when we do capture a big move, we can bank hundreds of pips, which can recover from losses and then some. What we don't want to do is have like a 25 pip stop loss here. Okay, see the price drop to here, get excited with 50 pips and, you know, exit the trade because you're just leaving too much on the table. Okay, once you're in a good position, we want to stay in it. That being said, if you do get taken out prematurely, if you miss the initial entry, perhaps you're more conservative and you want to wait for the trend to form more, there'll be ample opportunities again, like you can see here, pullback and a breakout. Price drops, pullback here and a breakout all the way down. Nice strong support level, breakout. Okay, and then obviously you don't want to be selling at or around the low anyway. You want to ideally get in earlier. If not, just go to another trading instrument or wait for another trade. As I said, this is a 1 hour chart. So I find trends to be more reliable when you're price action trading. So trends, support, resistance, 1 hour, 4 hour, daily, weekly, monthly charts work best for me just because they have more price data, and therefore I find signals tend to be more reliable. The last thing I'm going to do is go to a 1 minute or 5 minute chart and use some magic unicorn crystal ball indicator that somebody's selling to, you know, scalp a few pips here and there. Okay, I much prefer less time chart watching, capturing big moves that the big players have got their eyes on, and finding trends and riding them. That's as simple as it gets from my perspective, in my opinion. Okay, so good money management, good discipline, so don't let fear, anger, other negative emotions, greed, revenge trading, FOMO, fear of missing out, over trading and certain things get in the way of trading. Just a nice strong strategy and plan to stick to. Okay, so the candles range indicator, I've waffled enough. How does that come into play? Well, once we've discovered the trend, I actually don't think you need any indicators, if I'm being honest. I mean, as long as you've got good knowledge of price action formations and candlestick patterns, I think you're good. But and the aforementioned discipline, how we can use it is, in a downtrend, we'll look for the big red bars to appear, okay? So we're in a downtrend here. So when you see the big red bars, that shows us that there's been a big move to the downside, okay? Because a big range. Okay, and that coincides, you can see big bar there, so big bar on the indicator. And why that's important is because when there's been a big move like this, then we can wait for the range to go lower. Okay, because when it goes lower is when there's a pullback. Okay, you see here, so we had, let me just remove that line. Right, we had the big bar here, which was the first indication. Well, you know, around here it started. When we have this big bar, it's confirmation of this big move. And as it goes lower, this is when we get the consolidation of the pullback. And that's where we can draw our support, okay? And once the trends roll in, you see again, bigger ones. So after these, you can just wait for it to get lower, which is the pullback, the range. Again, support and trade the breakout. Here, increase in value again, and as they decrease back in value, you can draw your support and ride the momentum downwards, okay? As you can see here as well, big range, big candle, breakout of this support level. But when we see these high bars here, this is when we just wait for the low ones, which is the quieter period, and then trade on the breakout there. Okay, it's worth mentioning as well, I'm trend trading here. If you are a range trader, this indicator can help with that. Basically, when it's low, when the candle's range is low, it could be a good time to look to pick off the range if you're range trading. So whether you're using the stochastic oscillator to try and buy low, sell high, when the candle range is low, it could be a good time to consider doing that. However, I'm trend trading, so I'm going to stick to trading in the direction of the trend. I don't want to trade against the tide. Yeah, so that's how you can use the candle range indicator to help you pick some moves in the line of the trend. Okay, as I said, when we're down around here after a big move like this, you might not want to be selling at the low. That being said, there is opportunity. I can see from this level of support here. Again, if we apply the same principles, so you get the big candles here, then wait for them to go down low around here. That's our pullback, which we have here. Draw a support line, trade on a breakout. Okay. Then you could argue here, we've got one in play. We've got this big candle here. So this is our pullback. We've drawn our support level. Only thing being is we're kind of at the low of this move already. So just be interesting to see how this plays out. If price does break below this support level, we could probably get a big move to the downside. Okay. Let's look at this in an uptrend. Same principles will apply. So it's pretty straightforward. Don't overcomplicate things. Just see the market making these high lows. You know you're in an uptrend, okay? And then just wait. Do exactly the same. So uptrend, confirmed there. Then wait for it to drop. Okay, and then after it drops significantly around here, you start to see the red, so the opposite direction. And that's when you can just say, okay, there's been a pullback into the trend pullback, enter on a breakout there. And you can get in. In fact, that level of resistance then holds up quite well as support further down the line. Same again, so as it increases in value. Red, obviously, because we're in a uptrend, so we want the red to suggest the pullback here. And then you can look to time your entry into the trend on breakouts. This with this choppy price action and deep pullbacks like this, you want to be careful because you go from an uptrend into more of a range or consolidation. So you're just going to want price to break out away from there first. Okay, which is, you know, we won't always get it right. If you did, you know, let's just say you saw this big move up here and then you were looking for it to the indicator to drop for your entry and you did enter there. I mean, it wouldn't have been the worst trade in the world. You know, stop loss would have been probably below the low here anyway. So you might have avoided the trade based on that anyway, but if you did take it, you still would have been fine. Just to get in on this continuation here, but ideally you want to see like a smooth move upwards like this, just a short pullback, not a deep, too deep a pullback like these ones here. Okay, and then same again here as these bars increase. There's been a move, and then you just want them to decrease. And once they've decreased, that's when you can draw the resistance in an uptrend and let's trade on a breakout of the resistance. Okay, so you can use it in an uptrend or a downtrend. So you've got your support, market's moving upwards, so you know what you need to do. You need to wait for your big moves. Okay, so big move up here. then wait for it to drop down. When it drops down, you can draw your resistance. Enter on the breakout, resistance becomes support. Nice continuation. Okay, big move here, drops down. So you just draw your resistance, strong resistance there, nice breakout, resistance becomes support, continuation. Okay, big move up here, drops down. See here, big move drops down, so we just can draw our resistance, comes support, continuation. Big move up here, drops down. What do? We do the same, can draw a resistance. Not ideal in that scenario, but again, goes up, goes down, and another opportunity there as well. So you can enter in on this uptrend, ample opportunities. By the time you get towards the top, you want to be careful that you don't end up buying at the high. But that being said, after this big move here and a big drop, still was a little bit of gas left in the tank up here. Okay, so ample opportunities throughout. I think we missed one there. Big move up, drop down. The drop down can signal the pullback, and you can just enter there. But to be honest, do you really need this indicator? I mean, if we just move that out of the way, you can see these pullbacks just using your eyes anyway. Okay, just trend trading in direction of the trend, and trading on breakouts to help time the entry. We won't be right all of the time. There will be losses. That's fine. Scenarios like this, for example, when the price goes down here, if you see a pullback like that, it's not as much as a pullback as a change in direction. Okay, you want just more of these concise pullbacks like this, just to emphasize the strength of the trend. Otherwise, you just end up in like if you just zoom in on that, sort of choppy market conditions. Okay. And as I said, the indicator can be good for those who are range trading and you just want to look for low values and just try and pick off the ranges. You can do that as well. But for trend trading, just look for them to be high. When the high, it can signal big moves, which you can use to help you time entry on a pullback. Okay. There you go. You can see this range here. Probably want to avoid trading when you see something choppy like this, unless you're range trading. This is all low here, so you could be trading the range using the candle range indicator there. Okay, well, hopefully this video has given you an idea of how the candle range indicator can be used. I think it's worth mentioning as well, going back to the range trading, this is probably a handy tool if you are scalping, because you just want to look for a small range when you can try and pick a few pips here and there, just help you avoid volatile market conditions in a similar way that the average true range indicator will do. Similar thing, just show you the candle range. Okay, hopefully you've enjoyed the video. If you can like and subscribe, that'd be great and help my channel, and I hope to catch you on the next one. Thanks for watching.